how to identify aggregate turnover of 150 lakhs or 75 lakhs for few states in the case of a manufacturer, trader, restaurant. How to compute the 50 lakhs of aggregate turnover for a service provider other than restaurant service provider who opting the particular composition scheme. If so, their aggregate turnover in the preceding financial year, how to compute, what element it includes, what element it excludes, what element it includes, what element it excludes, includes and excludes, need to identify. That I am presenting here for kind consideration. Aggregate turnover, it includes the value of exported goods or services. Exempted goods or services are both which attract nil rate of tax or wholly exempted from tax, or it includes non-taxable supply also, interstate supply between the distinct persons if any, supply on own account and on behalf of principal. My defense, I understand that you got a doubt, sir. If it is a non-taxable supply, disqualify. Obviously, I'm telling you the aggregate turnover, which includes that also have to say. If it is a non-taxable supply involved, interstate outward supply involved, then you are disqualified from claiming this benefit. Further, aggregate turnover should excludes inward supply on which RCM apply. Meaning, I receive the goods or I receive the services because of RCM nature. As a recipient, I am paying the tax. Just because of I am paying the tax, it does not mean that it is my aggregate turnover. You should not be added because it is turnover of my supplier. But unfortunately, law costed the responsibility on me to pay the GST. Therefore, I am paying the GST under RCM. Does not mean that it is my turnover. Further, turnover should excludes GST taxes, CGST, SGST, IGST, UTGST, compensation cess. GST should not be included in the aggregate turnover of 50 lakhs or 75 lakhs or 50 lakhs as the case may be. And interest earned on deposit, loans and advances also should not include in the value of aggregate turnover. To look ahead for composition scheme. Now, here I would like to bring to a notice one simple example to bring you to make you understand this. This example is clear to understand this point. Example 1. X Limited, being a manufacturer of laptops, has 5 factories in Chennai, Salem, Coimbatore and Madurai. Chennai 1, 57 lakh 91,000 previous aggregate turnover, which includes GST 18%. Salem, Coimbatore, Madurai and Chennai 2. Total turnover 1 crore 51 lakh 51,000. X Limited is eligible for composition levy in the current year. Actually, where in the which state they are? In the state of Tamil Nadu. If in the state of Tamil Nadu, as you are aware of that, the turnover should be less than or equal to 150 lakh for a manufacturer, for a trader, for a restaurant service provider. Now here how much they got here? 151 lakh 51,000. That means here it is inclusive of tax, GST tax. Our computation should be exclusive of tax. Therefore 151 lakh 51,000 multiplied by 100 plus GST 118. Thereby will get aggregate turnover exclusive of GST. Tell me how much comes, Amma? 1 crore 51 lakh 51,000 multiplied by 100 or by 118. It comes how much? Hardly 1 crore 28 lakh 39,831, which is the actual turnover of the preceding financial year, which is well within the limit of our 150 lakhs. As a result, in the current year, X Limited is eligible to opt composition scheme. While computing the aggregate turnover, we should not include the reverse charge on which recipient liable to pay GST. If so, in the hands of the recipient turnover, it should not be added because it is not my turnover. GST taxes, if any, that should be eliminate and see. If so, that turnover is less than or equal to 150 lakhs, eligible for composition scheme in the current year. Further, my dear friends, important area I am referring here. Turnover will be computed PAN based turnover, meaning thereby is a PAN based turnover. Here, I will tell you here what do you mean by PAN wise turnover. I will tell you with example. You will understand this, sir. If I say here, Mrs. X Private Limited, Mrs. X Private Limited is one PAN holder, holding one PAN, one permanent account number. If so, he has multiple location of business, multiple states. Here in the state of Tamil Nadu, in the state of Andhra Pradesh, in the state of Kerala. Here unit 1, unit 2, unit 3. So aggregate turnover in the preceding financial year, here 20 lakh, here 90 lakh, here 65 lakhs. If so, here my dear friends, since one PAN holder, multiple registrations, multiple states, in that case the entire turnover should be subsummed. Total turnover here, it is 175 lakh. That means more than 150 lakhs. Therefore, here not eligible for composition scheme, because all India basis having one PAN number, aggregate the turnover look which is exceeded 150 lakhs or 75 lakhs or 50 lakhs, then not eligible for composition scheme. In the given case 175 lakhs, therefore not eligible for composition scheme. You may say that, sir, state wise, if you refer here, not exceeding 150 lakhs, but it is one company having one PAN number whose aggregate turnover on all India basis you have to see. At the same time, my dear friends, if you consider here, for example, in the given case, instead of Kerala, it is Sikkim. It is in the state of Sikkim. Here it is, I will say here, I will say here, it is only here 15 lakhs. It is only here 15 lakhs. Now in the given case, my dear sir, 15 lakhs. Tamil Nadu 20 lakhs, Andhra Pradesh 15 lakhs, Sikkim 65 lakhs. If that is the case, aggregate turnover, if you refer, 100 lakhs. Correct? Correct, Amma? 100 lakhs. So now in the state of Sikkim, threshold limit is less than or equal to 75 lakhs. In the Tamil Nadu, Andhra Pradesh, less than or equal to 150 lakhs. Aggregate turnover exceeded 75 lakhs but does not exceed 150 lakhs. Now you tell me, in the state of Sikkim, am I eligible for composition scheme? You have to say no. Right answer. In the state of Sikkim, not eligible for composition scheme. Not eligible for composition scheme in the state of Sikkim. In the rest of the states, Tamil Nadu, Andhra Pradesh, the threshold limit is 150 lakhs. But my aggregate turnover not exceeded 150 lakhs. Aggregate turnover only 100 lakhs. Can I go for composition scheme for Tamil Nadu and Andhra Pradesh? Here the law of the land says that, hey Mr. X Private Limited, if you disqualify in one particular state or UT to go for composition scheme, you disqualified. Rest of the states or UT also you disqualify for composition scheme. You cannot have the option for one state composition scheme, another state normal scheme. You cannot have two schemes having the same PAN number. Having the same PAN number, you cannot have multiple options. Therefore, either you may be a composition scheme all India basis, or you may be a normal scheme all India basis. Since you are not eligible for composition scheme in the state of Sikkim, you are also not eligible for composition scheme in the state of Andhra Pradesh as well as Tamil Nadu. Therefore, the same is applicable in the given case as well as in the given case. Not eligible. This point I will highlight with the help of a particular RTP question here is as follows. Example 2. Example 2, bring into notice. Reading example 2. Mrs. Y Limited, being a trader of laptops, has 2 units in Chennai and in Mumbai. Turnover rupees in lakhs exclusive of taxes. Chennai 50 lakhs, Mumbai 12 lakh. Aggregate turnover is 64 lakh only. You are required to answer the following. Y Limited is eligible for composition levy in the current year? Yes or no? Aggregate turnover not exceeded what limit? Maharashtra as well as Tamil Nadu, some 150 lakhs. Therefore, 150 lakhs turnover not exceeded. Therefore, they are eligible for composition in the current year? Yes. They are eligible for composition scheme in the current year. Yes. Point number 2. If so, Mrs. Y Limited can opt composition scheme for Chennai location and normal scheme for Mumbai location. Is possible? I'm asking you. Respond to me. No, not eligible. You have to respond, my dear friends. So here answer is no. Further, point number 3. Need to give separate intimations for opting composition scheme in each state? Not required, because it is integrated system. The opting of composition scheme is through GST network portal. I have to intimate. Prior intimation is required. Before opting the scheme, intimation is required. When should intimate? Important to note, if I am eligible for a composition scheme, I should intimate before the commencement of the succeeding financial year. If I want to go to composition scheme in the year 23-24, prior to 1st April 2023, I should have been informed to department I am going to opt for composition scheme from 1st of April 2023. Sir, if I am a registered person already having registered in GST law, paying the GST normally, if I want to switch over from normal scheme to composition scheme, intimation to department before the commencement of the succeeding financial year. Unless the law permitted to opt composition scheme in between of the financial year, maybe due to corona, due to pandemic, due to that, due to this, there may be permission may be granted. Okay, in the given case practical difficulty arises, therefore you can opt for composition scheme even mid of the year also they can say, but it should be by notification. Generally, as per the law, the composition scheme should be opt prior to the commencement of the succeeding financial year by intimating to department. Such a intimation need to be intimate if I have 28 states business, 28 states, entire turnover less than the threshold limit, no interstate supply, I am not supplying non-taxable goods, non-taxable services, I have not supplied through e-commerce operator, my turnover not exceeded the threshold limit. In that case, in the 28 states I have business, you want me to intimate to 28 times? too difficult for me, not possible also. In that case, it is sufficient to intimate in one state, I am so and so person having so and so registration number, opting for composition scheme because registration under the GST based on the PAN number only. As a result, sufficient to intimate in one particular place, deemed to be intimated for other states also. Further, my dear friends, now I am referring to you very important. See here, when you aggregate the turnover, you should not aggregate turnover of the two PAN holders. There is a case law also. There was a case law of the tribunal. Two or more PAN holders turnover should not be clubbed together, which I am going to bring to a notice here. With an example. Here, Mr. Rafi and Mrs. Rafi Mr. Rafi PAN number different from Mrs. Rafi PAN number. We both of them co-owners of commercial property. Co-owners of commercial property. Here, rent rupees, rent here rupees 2 lakh, which is in Tamil Nadu, 2 lakhs per month. Separate checks issued. Separate check to separate check to Mr. Rafi 1 lakh and to Mrs. Rafi 1 lakh. Separate checks has been issued by the tenant to the landlord. In the given case, separate checks has been issued. Rafi and Mrs. Rafi, Mr. Rafi and Mr. Rafi, co-owners of property. Rent is 2 lakh rupees per month for the entire property. Separate check to Mr. Rafi 1 lakh and to Mrs. Rafi 1 lakh issued by the tenant to them. Throughout the year, Mr. Rafi received only 12 lakh. Threshold limit for registration is 20 lakhs, but Mr. Rafi is 12 lakhs. Mrs. Rafi 12 lakhs. No one has been registered on GST law and paid the GST because Mr. Rafi and Mr. Rafi no other income, only the rent. In that case, department send the notice asking, hey Mr. Rafi, you wantedly avoiding the GST payment here because a single property source of income remains same, by you splitting this into different PAN numbers, You can't escape from the payment of GST. You have to be registered in the GST because we are clubbing this into one basket in your name because you have the higher income. Therefore, clubbing in your basket, entire 2 lakh rupees is your income only, your turnover only. 2 lakhs into 12 months, 24 lakhs, which is more than 20 lakhs for registration. You have to register and pay the GST. Like the department insisted the Rafi. Rafi replied, sir, sorry, unfair. You cannot expect like that. The income tax provision not able to apply under the GST law. Under GST law, we won't have any clubbing provision, sir. It is a PAN based turnover only, sir. Not accepted. The matter went to the court. In the case of Pankaj Bhai Champaklal Parekh case, in the case of Champaklal Parekh case, Pankaj Bhai Champaklal Parekh case. In the case of Pankaj Bhai Champaklal Parekh case, the tribunal stated that department, what Mr. Appellant says is perfectly correct. You cannot bring GST provision under GST provision, income tax law. Income tax is separate. The name is of direct taxes. The direct tax provisions cannot be done under the GST law because GST is a PAN based turnover. Thereby, you have to go for registration. Where is the question of clubbing provision? Which section says? Which rule says? Which notification says? You tell me. Just you can imagine in the income tax and dumping in the GST law, which is indirect tax, incorrect. Therefore, in the given case, Mr. Rafi not required to get registered because his aggregate turnover is only 12 lakhs. Mrs. Rafi aggregate turnover 12 lakh. Both the turnover having two different PAN numbers, not required to go for registration of GST, not liable to pay GST. So in the given case, the judiciary given the judgment in favor of Pankaj Bhai Champaklal Parekh case, not required to go for registration. So separate PAN numbers, you should not be clubbed into one basket. PAN based turnover only. If you have one PAN number, multiple registrations, because this registration GST law is based on the PAN number, in that case, no problem. In that case, that entire aggregate turnover can be clubbed together because it is a one PAN based turnover. Now please come back. Referring to here furthermore, my dear friends, very important area I am referring. Important point under the head, important point number 4. For the purposes of computing the aggregate turnover of a person for determining his eligibility to pay the tax under this section, the expression aggregate turnover shall include the value of supplies made by such person from first day of April of a financial year to up to the date when he becomes liable for registration under this act, but shall not include the value of exempt supply of service provided by way of extending deposit, loans, advances, in so far as the consideration is represented by way of interest or discount. Understandably not understand, sir. Just you read like super fast express. How we can able to understand? The law is like that only, my dear sir. The law is like that only. You have to give more attention to read again and again to make you understand with the help of the practical exposure. Then only the provisions will be understandable. Reading again. For the purpose of computing aggregate turnover of a person for determining his eligibility to pay the tax under this section. Eligibility means what? I am eligible for compulsory scheme or not, for which I have to refer the previous year aggregate turnover. Previous year aggregate turnover, how much? It is less than 150 lakhs, less than 75 lakhs, or equal to 75 lakhs, or more than 75 lakhs, or less than equal to 50 lakhs, as the case may be. While determining that turnover, to decide I am eligible or not in the future period for compulsion scheme, for determining the aggregate turnover in the preceding financial year, the expression aggregate turnover shall include the value of supplies made by such person from the first day of April of a financial year up to the date when he becomes liable for registration under this act, but shall not include the interest earned on deposit, loans and advances. How to understand this? We'll be presenting with the help of numeric example. In this given case is as follows. Example. I am referring here example only for the aggregate turnover of the preceding financial year, while aggregating the turnover which is to be include, which is to be exclude, to decide whether I am eligible for the composition scheme or not in the forthcoming year. For example, my financial year here is 2023 and 24. The another financial year is 2024 and 2025. So here in this year, am I eligible for composition scheme or not? Eligibility depends upon the previous year. In this current financial year 24-25, am I eligible for composition scheme or not? I have to refer my previous year. My previous year means preceding financial year. In that case, what was my aggregate turnover? For example, in this financial year 2024, here you being a, let us say, assume you are Mr. C, a practicing CA. Practicing CA. Incorporated. When you incorporate your business, incorporated, for example, my dear friends, exactly on 1st April, for easy reference purpose, 2023 you incorporated. Now here quarter, first quarter, because quarterly you are liable to pay to go for composition scheme. For this current year, what was your previous year? 2022-23. Now in the year in which you incorporated, in the year 2024 incorporated, for the previous year is 22-23. In the year 2023, what was your turnover? 0, because I was not existed. 0 is less than or equal to 150 lakhs or 75 lakhs or 50 lakhs. In the given case, I am a service provider providing services other than restaurant services. For me, aggregate turnover to get eligibility for the current year to go for composition scheme is 50 lakhs. Aggregate turnover in the preceding financial year does not exceed 50 lakhs. In the given example, what was my turnover? 0. Therefore, in the year 22-23, 0. Therefore, the year in which I incorporated, always I am eligible for composition scheme. As a result, I opted the composition scheme. So here after the composition scheme only when I have to register. What is my turnover in the first quarter? First quarter my turnover here is, let us say my turnover first quarter here is 20 lakh. So for a service provider in the state of Tamil Nadu, the aggregate turnover for registration is 20 lakhs. 20 lakhs only I got. That means in the first quarter means from 1st April 2023 to 30th April 2023, my turnover 20 lakhs, not equal registered. Now in the second quarter, my turnover is, let us say, 30 lakh. Now what happened? In the second quarter, my turnover exceeded the threshold limit for registration. Threshold limit for registration 20 lakhs. Up to 20 lakhs of turnover, not required to registered. You cross 20 lakhs, go for registration. So I'm entering into third quarter. My turnover, let us say 20 lakh. So in the fourth quarter, for example, my turnover is nil. So in that financial year, how much I have got turnover, total turnover in the given case 20 plus 30 plus 20, 50 plus 70. So 70 lakhs my aggregate turnover. Now point here is, my dear sir, in the year 23-24 I want to opt composition scheme. My previous year 22-23 0, I am eligible. So for up to 30th April I have not registered. Up to 30th April I have not. Up to 30th, here first quarter means what? 30th, not April, my dear. It is 30th. Tell me. June. First quarter, no ma? April, May, June is 3 months, 1 quarter. So first quarter, 1st April 2023 to 30th June 2023, my total turnover is 20 lakhs only. Is clear? Total turnover is 20 lakhs only. Not required for registration, I have not opted registration. Second quarter, since crossed the limit of 20 lakhs, I opted for registration. While opting for registration, I too opted the composition scheme. Now, here, composition scheme turnover eligibility 50 lakhs only. So up to the end of the second quarter I got how much turnover? 50 lakhs. Dear friends, in the third quarter what happened? I provide 20 lakhs turnover, resulting that it became 70 lakh. Now, total aggregate turnover 70 lakhs in the year 2024. Now, when I entered into the next year, 2024 and 25, when I entering into 2024-25, am I eligible for composition scheme? Eligibility of composition scheme in the current year, always refer the previous year. When I refer the previous year, 23-24, what is aggregate turnover? Which includes, which excludes? Law says, from the 1st of April till the date liable for registration, turnover, if anything is there, that should be clubbed together and see. That means this 20 lakhs turnover should add in the aggregate turnover. 20 lakhs plus 30 lakhs plus 20 lakhs. Total how much? 70 lakhs, which exceeded 50 lakhs, resulting that in this current year is eligible? Eligibility? No, not eligible. Non-eligible, not eligible. Because previous year aggregate turned 70 lakhs. How you computed? That turnover includes from 1st of April till the date liable for registration. From 1st of April 2023 to 30th June 2023, that quarter turnover was 20 lakhs. That should be included and see. Now, sir, that is clear. Which one? Eligibility purpose. Now I am reading the content. You will understand this. When I read this content, you will understand. Point number 4. For the purposes of computing the aggregate turnover of a person, for determining his eligibility to pay tax under this section, the expression aggregate turnover shall include the value of supplies made by such person from the first day of April of a financial year up to the date when he becomes liable for registration under this act. That also should include and aggregate it when you go for eligibility purpose, but should not add interest end and deposit, loans or advances. Fine. Now referring to here point number 5, very important. for the purpose of determining tax payable by a person under this section, the expression turnover in state or turnover in union territory shall not include the value of the following supplies, namely supplies from the first day of April of a financial year up to the date when such person becomes liable for registration under this act, and exempt supply of services provided by way of extending deposit, loans or advances insofar as the representation is represented by way of interest or discount. That should not be added. What is these two are not addable? For the purpose of dash, for the purpose of dash, tax payable. Tax payable comes into picture only when I am going to compute the aggregate turnover for the current financial year, aggregate turnover for current financial year, when I am going to aggregate that aggregate turnover for taxing purpose for payment of the GST, the rate of 0.5% CGST, 0.5% HGST as a trader or manufacturer, when I am going to compute that aggregate turnover should not include the turnover from 1st of April till the date liable for registration. Meaning what? Example. Look here. Same example. Sir, I am in the year 23-24 only. I am in the year 2023-24. My previous year was 0. Therefore, after the compulsory scheme current year, when I go for registration, when I gone for registration on 1st of June, because up to 30th of, on 1st of July, I gone for registration, because up to 30th of June, my turnover how much? From 1st of April till the date liable for registration is only 20 lakhs. Up to the end of 30th June, my turnover only 20 lakhs. Therefore, I have required registered, not required registered. Therefore, not registered. From 1st of July, liability to go for registration arises. Therefore, I opt in the registration. In that case, I have to pay the GST under composition scheme, because on 1st of July, when I apply in the year 2023-24, on 1st of July, when I apply for registration, I apply the registration on 10th of July 2023. So effective date of registration is from 1st of July 2023. There, I am going to pay the GST as a composition scheme liability, because I am a practicing CA. In the given example, I am a practicing CA. I am a service provider. I am liable to pay CGST 3%, HGST 3% as a composition scheme rate. As a practicing CA, other than the restaurant services, if I am providing services under composition scheme, if I opt the composition scheme, I am eligible to pay CGST 3%, HGST 3%, effectively 6% on what I am going to pay. So, for the purpose of determining the tax liability, what is my aggregate turnover in the year 2023 and 24 means aggregate turnover total is here. How much you got? Almost all up to the third quarter 70 lakhs. In that you eliminate it. Turnover from 1st of April till the date liable for registration. How much? 20 lakhs. 1st of April to 30th of June 20 lakhs. Out from 70 lakhs, deduct 20 lakhs. Balance 50 lakhs. With this 50 lakhs is through parts. One is second quarter 30 lakhs, third quarter 20 lakhs. So now here when you talk about 30 lakhs, already your turnover how much? 20 lakhs. So now when you determining aggregate turnover as on end of the second quarter, aggregate turnover is 50 lakhs. But out of this 50 lakhs, the turnover from 1st of April till the date liable for registration how much? 20 lakhs. That you eliminate. 50 minus 20 balance 30. The 30 is this, which will attract CGST 3%, HGST 3%. On 30 lakhs, it works out how much? So that much liable to pay CGST. Now it is under composition scheme. Is a composition scheme. Now to have composition scheme, being a supplier of service other than restaurant, what is the criteria limit? aggregate turnover for eligibility purpose 50 lakhs only. Now in the current year you cross the 50 lakhs. In the current year if you cross the 50 lakhs, then with immediate effect you should switch over to normal scheme. You should not wait for the next year to switch over. If you violated any condition of composition scheme, with immediate effect you debarred from the composition scheme. You have to go for normal scheme. Intimate to department and go for normal scheme. So in the given case, you cross the 50 lakhs of turnover in the current year 2023-24. Therefore, from that quarter turnover how much is it? 20 lakhs. So the 20 lakhs will attract the GST at the rate of CGST 9%, SGST 9% on 20 lakhs, which is 1,80,000 plus 1,80,000. You have to pay normal scheme as a C. Normally you have to pay. Now you entered into the next year 2024. What was the previous year? When you refer the previous year turnover for eligibility purpose, that turnover includes the turnover from 1st of April to 30th of June, because the turnover from the date of 1st of April till the date liable for registration, from 1st of April of the previous year till the date of liable for registration, namely 30th of June, what was the turnover of 20 lakhs should include and see. That means the 20 lakhs plus 30 lakhs plus 20 lakhs, total 70 lakhs, which is more than 50 lakhs. So in the subsequent year 24-25, you are not eligible for composition scheme, because in the previous year you crossed the limit of 50 lakhs. When you go for eligibility purpose, from 1st of April to the date liable for registration, include the turnover and see the turnover how much it is for eligible purpose. For the purpose of taxing, to levy the GST as a composition scheme assessee, when you are going to tax it, that turnover should not include. From 1st of April till the date liable for registration should not include for taxing purpose. For aggregate eligibility purpose, to avail the benefit of composition or not, that time you refer the previous year. Such previous year turnover should include the turnover from 1st of April till the date liable for registration.